Hey guys, welcome to this week's stock market recap. I'm Robert Montes with Nexus Wealth Management. Today we're going to be going over what helped the market, what hurt the market, and your key takeaways for the week of August 24th through 29th, 2025. So first off, let's get into the recap. We saw the market pretty much at a standstill. So the S&P 500 last week finished up 0.3%. The Dow finished down 0.2%, and then the NASDAQ was the biggest loser, finishing down 1.2%. So when we look at all these things, what actually helped the market? Well, last week, the majority of what we saw that helped the market had to do with more data coming in regarding corporate earnings. So we saw second quarter, the market's up about 3% as far as total growth. We also saw the Consumer Board's survey going out showing that investor confidence was high. So people are feeling good about the way the market is going. We saw companies like NVIDIA show very strong earnings reports as well. So despite a slight dip towards the end of the week, this showed that AI stocks were still in demand. And then the last thing we've been talking about was the anticipated rate cuts coming up from the Fed here in September. Last I was looking, those are at about an 89 to 90% chance and likelihood of happening. So that's something that people are very excited about, all of which help bolster the market's performance. So as far as what hurt the market this past week, there are a couple of things. Number one is inflation concerns. So even though consumer confidence is high, we are seeing inflation sitting at, I think consumer goods are up about 2.8%. So that the fear with that is that if that continues to rise, that the Fed may not cut rates. And so that was something that was definitely pushing down on the market's performance. The other thing we saw is ongoing tariffs and geopolitical concerns. So the tariffs are the big talk. We've been talking about this all year. As that is still getting figured out, it is definitely causing people to pay attention to what's going on and how it's going to affect the market. The third thing was mixed economic signals. So while we were talking about earlier that people feel confident about the market, we are seeing jobless claims on the rise. We've also, an increase, not on the rise, but an increase there. And then we've also seen consumer spending has been down a little bit. So as far as your key takeaways, what I would say is two big things. One is continue to monitor consumer spending trends. I think this is going to point in a big way the direction our economy is going to go, whether that's continuing positive or shifting the other direction. The other thing is, I say it all the time, diversify, diversify, diversify. Review your strategy. What we're seeing happening with tech stocks right now is they're at very premium price. So just don't be over centralized into any one industry. Make sure that you're spreading out the risk so that if there is a market correction, you're not overexposed to something that maybe has been priced very high. If there's any questions you guys have, we are here to help. Love to be a resource for you. My contact info is everywhere. Feel free to reach out. Like this video, please consider sharing it and let me know if I missed something. Thank you guys so much. Appreciate you. Catch you next week. Take care.